All right, good afternoon. Let's do some business. We are doing it live right here. Doing more at 4 weekday afternoons. We get right down to business right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air on 790 KBC, streaming live online worldwide at kbc.com and your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. The week starting with a bang on Wall Street, stocks moving higher with both the Dow and the S&P 500 hitting record highs as the third quarter earnings parade continues. The Dow coming in for a closing gain of 201 points, settling at 43,065, a record high close, and for the first time above 43K. The S&P 500 moving up 45 points at 5,859. The Nasdaq gained 160 points, settling at 18,503. That index about 170 or so points below its all-time high. The yield in the 10-year note is back up there at 4.10%. Bitcoin also getting a pop today, right now above 66,000. This after China announced several fiscal stimulus measures over the weekend, though it did not disclose many details. The largest cryptocurrency is higher for the year, in fact, up about 60% year-to-date now. It's still shy of its all-time high, but getting closer. The all-time high was just below 74,000 that we saw back in March. Price of gold, meanwhile, edging a bit higher right now at around $2,666 and change. We see silver up 14 cents at $31.46. The price of oil starting the week a bit lower despite the high tensions in the Middle East. Brent crude oil losing about 2% to give back all of last week's gains and then some. This after a big announcement by Chinese authorities failed to provide details on a stimulus plan sufficient to reassure investors nervous about crude oil demand there. According to MarketWatch, the organization of OPEC exporting countries, meanwhile, further trimmed its outlook for growth in oil demand this year and in 2025, also contributing to the latest drop in oil prices. Shares of Vistra, this is this electricity company based in Texas, extending its lead as the S&P 500's biggest gainer of the year with a rally that put it way up there as one of the top performers of the day. Shares of Vistra up about 6% and now up about 245% over this past year, beating out NVIDIA's nearly 180% gain. And speaking of NVIDIA, the Magnificent One hit a record high today, above $138 a share. We also heard from a Fed head today. Fed Governor Chris Waller said the surprising strength of the economy suggests the Fed could or should proceed, he says, with more caution in cutting interest rates to make sure inflation does not reignite. Turning to geopolitics, China launching a new military drill off the coast of Taiwan, quite dramatic, in what China described as punishment for a speech given by the Taiwan president when he vowed to resist annexation or encroachment upon our sovereignty, in his words. China claims the self-governing island of Taiwan as its own, and President Xi Jinping has vowed to retake it by force if necessary. I'll discuss the latest developments with China expert Gordon Chang, Gatestone Institute senior fellow, author of The Coming Collapse of China, the Great U.S.-China Tech War, and his latest book, China's Project to Destroy America. Gordon Chang will be joining me live later this hour. But first, on your money, the markets, and the economy. Joining us live now is top-ranked money manager Ken Winans, CEO and Chief Investment Officer at Winans Investments, which you can find at winansinvestments.com. Ken Winans, also a market historian, author of numerous books, including Investment Atlas 1 and 2, also Forbes magazine contributor, and at 6 o'clock this evening, host of Winning with Winans, right here on 790 KBC. Ken Winans, thank you very much for coming to the line here this afternoon.
Well, Frank, I think it's safe to say the Bulls are running, and they are running strong. The only difference is that what's leading the herd has changed. And what I see very clearly are the financials are going to be the lead horse in this next rung in the market. It was amazing to see how well they ran today. And, we're just going to have more to come. It's looking pretty good.
The ball got rolling last week with J.P. Morgan Chase's earnings and Wells Fargo. It looks like they're still on a roll here. What do you see ahead of the banks? And for that matter, what do you see ahead for the Fed's next move here?
I've told most of my clients, I'm going on the assumption that we're going to have the Fed be fairly tame for the remainder of this year. The inflation situation is still what it is. You have this ping pong effect between wage push inflation and demand pull, and they play their role back and forth. I mean, you're looking right now, for instance, I mean, it's also seasonal. Crude oil is backing off, but then you're having other commodities that were affected by the hurricanes taking off. So that picture's mixed. But I still do think, especially going into the end of the year, the big letter next year is going to be COLA, cost of living increases that are going to kick in probably first part of the year. That's after the election. We'll see what kind of a role that plays. So inflation's there. The Fed's aware of it. And quite frankly, with the earnings that we're going to be seeing coming out over the next 2 weeks, I don't think the Fed's going to have a compelling reason to necessarily feel they have to drop rates more than they have.
They're live with Money Manager Ken Winans. And what about, we got the election coming up too. We see shares of Donald Trump's company moving higher today at DJT. That one's been on the roll, Ken, and it's kind of viewed as a proxy for his chances of getting reelected. That stock moving up nearly $5 today to 29 and change, a jump of 18%. What do you make of that? And what the market might be telling us here coming up in about a month or so?
Well, Frank, as you and I both know, we spent a lot of time talking on tonight's show about that particular stock, and certainly about the other titans of industry in this country. And certainly at 6 tonight, we'll have more on that. You know, the simple fact of the matter is that a bull market, it raises the tide for all boats, not at the same level. And as I just mentioned, there is definitely a rotational change in the leadership in the market. But clearly, people are looking for pet stocks. Unfortunately, they look for things they believe in. Certainly people feel that way about tech. I know that I have some clients that have flatly told me, I am never to sell Apple. I am never to sell Google under any condition. That's fine. That's their prerogative to put those kind of constraints on people like me. But anyway, that is the nature of it. And I do think that stocks can become political. That's a good example of one right there. And it will probably continue to be very volatile between now and the election.
All right, and speaking of Apple and Google, we see Apple at or near its all-time high today of $4 to nearly $4 at 231 and change. Google moving up too at 166 and change. What about those two, Ken, at these levels here?
Well, here's the thing, and I think you almost have to take those two and you have to put them in different camps. I mean, Apple, although we call it a tech company, it is really a product company. And I just know that when I talk to people about the new iPhone, I just don't hear a lot of excitement, Frank. I know there are those people who want AI in their lives. There's a lot of people who are hesitant right now. And it will be interesting to see how iPhone 16 sales going into the holidays. It's an awfully expensive product. You don't want to bring up failures, but I think the Apple goggles didn't work real well. You don't hear anybody talking about them. There's that kind of situation. Google's in a different camp. The Google situation right now, I think the Department of Justice is serious about really looking at breaking up Google. That is going to be in the news really for much of the next year. And I think people, again, not to say you don't own or not own a stock strictly based on that, but we could see a very different Google in 2025 than we do today. As I said, although certainly tech is having a good run, I'm just looking for other areas to redeploy money into. And the two that come to my eye right now are finance and real estate. And I know in a moment I'll give you some of my picks. But again, people just need to get in their minds, bull markets, this is healthy to have a rotational shift in leadership. And it's not to say they're going to be left behind badly, but they might lag if they wait on redeploying until this rally has really taken hold.
Very interesting. Google also making news today, by the way, to buy power for AI needs from a small nuclear reactor company. As we see here now, AI is requiring a lot of energy, and Google signed a deal with this small nuclear reactor company. What's your reaction to that news here?
Well, it's interesting as you talk to people about, these alternatives in energy. Getting away from fossil fuels. You do find more and more, especially in Europe. France has been using nuclear power for a very long time. The technology's gotten better. Reactors are smaller. It's very proven. I know that there's a lot of fear about it, but ask the United States Navy. Our naval ships have been running on nuclear power for a very long time. and we've had very few mishaps in recent history. So the technology's there. I do think it's a viable option to give us the power that we're going to need going forward. And in many, many respects, if we can just get over the hump of cost of building these plants, they're very expensive. They're a bit like water desalination plants. We've had this talk before, Frank, that California's water needs, in my opinion, there's no doubt it's not it's not if, it's when. And I somewhat feel that way about nuclear power. I think we're doing a revisit to alternatives that we had once looked at back in the 1970s when we had the Arab oil embargo. So it's not a surprise. But with that being said, it's not just AI. Don't forget that crypto itself needs a tremendous amount of energy. So if you take those two and put them together, we've got to come up with a solution that can fulfill our needs. There's no doubt.
And speaking of crypto, we did see a pop here today. Bitcoin back above 66,000 here. Ken, I know you got your crypto credentials too now, so I got to ask you, what are your thoughts on crypto here? Where do you see a Bitcoin go from here?
It's funny. I talked to 3 clients today. None of them have ever talked to me before about crypto, and it all came up. And it's just interesting. But what I'm bringing up, as I always do, to the standard stock investor who doesn't know when you talk about a wallet, they have no idea what they're talking about. I tell them, look at Coinbase. To me, again, it's very volatile. It acts like a crypto. But the beauty about Coinbase is, since it is an exchange, you are not left to try to pick which crypto is going to work and not work. You're playing the whole lot. So that's something to certainly take a look at. And it was up 12% today. So it does correlate very, very strong to what happens in crypto. But Frank, the other thing, let's not forget, and I know I wrote about it in my article earlier this year, look, crypto and NASDAQ have a very strong quarterly relationship, not day to day, not necessarily month to month, but quarterly. And I think with the NASDAQ continuing to power full steam ahead, if you're somebody who wants alternatives in your portfolio like crypto, there's confirmation that it can finally break out and move forward, because Bitcoin especially has been in a trading range now for about 4 months. It is my opinion that if NASDAQ continues to move ahead, I think crypto will break out of that range, or certainly Bitcoin will.
All right, and we got from digital gold to so-called analog gold. Gold, of course, did hit a record high earlier this year, and just recently in the last month or so, actually, above 2,700 an ounce. It's hovering just below 2,700 here right now, 26.66 at last check. What about good old gold here?
It's interesting. You have to look at gold geopolitically. And what I mean by that is there are a lot of central banks around the world that are actually adding gold to their inventories. And it's as much a move to balance out their central bank reserves against the dollar, because there's a lot of concern about the way that the United States spends money that it doesn't have in its indebtedness. So we know that. Number 2 is seasonally. Many countries in the world, especially India, this time of year, they do start buying gold, especially for weddings and ceremonies and things like that. It's part of their culture. So I think that demand for gold, and I'll throw silver in there too, even though it's more of an industrial metal, but you have to look at it in the same light. I've just simply have told my clients that, look, it warrants a place in a stock portfolio. For most clients who don't have the storage ability, I believe the ETFs are a good way to go. GLD and SLV, which is the gold and the silver ETFs that have been around the longest, I think it certainly has room to go, and I think the rally in gold is going to continue. As long as we have an inflation problem on the globe, we're going to have gold moving up.
All right, let me ask you the big question here now then, Ken Winans. Where are you putting money now and or taking it off the table?
Well, it's interesting. I wanted to run this analysis before the show. I've been talking about insurance companies for a while, Frank, but I think you better take a good hard look at the good old-fashioned banks. Some of them have dividends that are still above 3%, whether it's Bank America, Bank of New York, Fifth Third Bancorp. They all have dividend yields north of 3%, and they've all been powering ahead. So I think any of the good old banks, I know that there's some concern that the banking system is going to be under strains similar to what happened 2 years ago. It's a different world now, and I think you can certainly at least consider getting financials back in your portfolio. Last but not least, I know you just talked about what happened with True Value Stores. But I'm looking here at the real estate sector. Now, I look at it a little different than most people. I put building material companies, home builders, developers, everything, REITs, land companies, all of them in there. And the simple fact of the matter is, even though housing is having some issues and there might be gluts in other areas, what I'm telling you is that the stock market itself is telling you that it thinks that real estate is going to have a strong year going into 2025. I'm looking at companies like Masco, which is a building material company, symbol MAS. It's up 27% on the year. Again, if housing was going to continue to have these troubles, I would expect stocks like that, and I will continue to reaffirm my buy on home builders. Take a look at Lennar, LEN. The stock is up 22% in the year. I think going into building season next year, they're going to do very well. And Pulte Home, PHM, stock's up 38% on the year. So again, people who are over tech and under financials and under real estate, highly recommend. Good time to rebalance your portfolio before the November, December, January run in the market.
Right, in case you hadn't heard the news, True Value filed for bankruptcy after 75 years in business, blamed the weak housing market for plunging sales. Also, it should be noted the so-called dollar retailers, of course, we got 99 cents only stores go out of business this year because nothing's 99 cents only anymore. But today we see Dollar General down more than 3%, Dollar Tree down more than 3%. What are we to make of this low-end pain out there in the retail space?
There's a phrase in economics called creative destruction, and old companies do fade. Other companies figure out a way to reposition themselves, and a lot of companies, and I've talked about it before on retailers, I actually think that many of them are the heroes of coming out of COVID. They had to navigate closed stores, bulging inventory, logistical problems, and these companies, same with restaurants, came back strong. The point is, Frank, that for every True Value, there's a Home Depot that's up 20% on the year. There's a Lowe's up 26%. It's not a bad thing to have consolidation in retail and moving forward from there. Same with traditional retailers. We're going to find this holiday season there will be good, bad, and ugly. I actually think even though that we have some pretty heavy credit card debt, based on what you're certainly the feelings about the economy as far as people's paychecks, certainly with what's happened in the stock market, I think some of those profits in the stock market will make its way into holiday cheer. So we'll just have to see how the rest of the retail world plays out. But no, there's going to be clearly continued consolidation in retail. I have no reason to believe that will not continue.
All right, and last but not least, I have to ask you, of course, since you're a big space fan, your reaction to what we saw over the weekend with SpaceX successfully launching that fifth test flight of the Starship, and then catching the Starship booster with what they call chopsticks there at SpaceX. That is very, very big news, and we certainly join in applauding that huge accomplishment over the weekend.
Frank, there are certain things, we hear all these negative things about America, but I see that happen, and glad that several of the Apollo astronauts who are alive to see that happen makes me proud to be an American. And I know after that boondoggle what happened with the Boeing capsule with the International Space Station, it's great to have a win. A true hats off to the world's richest man, Elon Musk. Job well done, or as they say at NASA, mission accomplished.
Absolutely. I hope the folks in Hawthorne at SpaceX are listening. Congratulations from all of us here, certainly. Ken Winans, thank you very much for taking the call here. That is top-ranked money manager Ken Winans, CEO and Chief Investment Officer at Winans Investments at winansinvestments.com. And Ken Winans and I will be continuing the conversation with Winning with Winans at 6 o'clock here this evening. You can hear Winning with Winans every Monday evening at 6 p.m. Ken Winans, author of numerous books, including Investment Atlas 1 and 2, also Forbes magazine contributor. Ken, it's great to have you with us here. Thank you very much for taking the call and looking forward to the show this evening.
Absolutely, Frank. Take care now. Bye-bye.
Thanks again. All right, as for the freeways down 790 KABC. It's Frank Mottek here. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Now, with the U.S. debt at more than $35 trillion and climbing, not to mention the Biden administration getting us involved in costly wars, developing the digital dollar, central bank digital currency, and inflation spiraling, It's more critical now than ever before to safeguard your assets, like your cash savings and retirement accounts with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement in the market and cash savings in the bank. Feel confident, prepared, and in control with physical gold and silver. Give Joe Morgan a call at 1-800-753-8534. Mention Frank Mottek, and you could get $1,000 worth of silver and a qualifying purchase. 1-800-753-8534. Again, you can get $1,000 worth of silver with a qualifying purchase if you mention yours truly. 1-800-753-8534 or visit UnitedGoldGroup.com. Mottek On Money continues in 790 KBC. Good afternoon. Record-shattering day on Wall Street to kick off the new week. The Dow to record high close, up more than 200 points at 43,065. The first record high close above 43K. The S&P 500 at 45 at 5860. That, too, is a record high. The NASDAQ of 160 points at 18,503. That index about 170 points below its all-time high. The yield in the 10-year note is back up there at 4.10%. That's the one that impacts the fixed-rate mortgage rates, which are back on the upswing. Checking the cryptos now, Bitcoin up about 200 at 66,128. Ethereum up about 10 at 2,633. And Doge at the moment at 12 cents. NVIDIA at a record high at more than $3 at 138 and change. Apple up nearly $4 at 231.30. Google up nearly $2 at 166 and change. We see gold right now up about $1 at 2,666 and change. Silver up 14 cents at 31.46. And now the latest news for you here in 790 KBC. Developments involving China and Taiwan. Chinese military surrounded Taiwan in a massive military exercise. China also deployed one of its two so-called monster ships from the Chinese Coast Guard during Chinese military exercises surrounding Taiwan. The one-day exercise held in the Taiwan Strait ended up surrounding Taiwan, and the Chinese military, we understand, sent a record 125 aircraft as well as 17 warships and 17 China Coast Guard vessels around Taiwan. Joining us live now to discuss these latest developments is China expert Gordon Chang, Gatestone Institute senior fellow, author of The Coming Collapse of China, The Great U.S.-China Tech War, his latest book, China's Project to Destroy America. He's also on X, formerly known as Twitter, at Gordon G. Chang. Gordon Chang, thank you very much for taking the call. And what's the very latest on what's happening around Taiwan?
The exercises are finished. They were very quick. It was really meant to make a political point rather than a military one. But we know that China doesn't want to invade Taiwan. There's a lot of huffing and puffing. But the one thing Beijing could do, and it's the one thing that Taipei is worried about, is that China will declare a quarantine around the island. A quarantine is not an act of war, but in this case, it probably will lead to war. And the authorities in Taiwan think probably China will do this within 6 months.
On the You're Live with Gordon Chang, and you mentioned the Chinese wanted to make a point. What was that point? This is all following a speech given by the Taiwan president, right?
Yes, well, it's 10-10, Double 10 Day, which is basically the national holiday for Taiwan. And the Taiwan president always gives a speech. President Lai gave a moderate speech, but Beijing, of course, was going to do this anyway because they planned this a long time ago, regardless of what President Lai was going to say. The point is that China can use military force and take over and annex Taiwan. But we got to remember that Xi Jinping doesn't trust his generals and admirals. A war against Taiwan would be exceedingly unpopular with the Chinese people, and the Chinese regime is very casualty adverse. So this is a lot of intimidation tactics, and the people in Taiwan understand that, and they're a little bit numb to this by now.
And it looks like getting some attention is this big Chinese Coast Guard vessel, a so-called monster ship within the China Coast Guard. What do we need to know about that?
Yeah, that Coast Guard vessel really is about as big as an American Arleigh Burke destroyer in terms of displacement. So this is really more a warship. It's painted white, but nonetheless, it's very clear that this has the capabilities of a modern warship.
All right. And what kind of response, if any, did we see from the West? Of course, as far as we're concerned, did the U.S. Mobilize in any way in the face of these exercises?
It's not clear that we did. We saw statements from General Pat Ryder, from the Pentagon spokesperson, as well as from the State Department's spokesperson and the U.S. ambassador to China, Nicholas Burns. We issue these statements, but Beijing just ignores them because we're not willing to mobilize to protect Taiwan. And China looks at what we do rather than what we say. And the problem, though, with these warnings is that they are hollow. And we've known from, for instance, the 1930s in Europe that hollow warnings lead to wars.
Was travel to Taiwan impacted by this exercise?
No, it wasn't. The planes could still fly through, but if there's going to be a quarantine, as many people do expect, then travel, yes, would be affected because Beijing would interdict planes and require them to submit to Chinese inspection. So even if it's just radio inspection, this is a problem because it is what's called a gray zone tactic. And I'm not sure that Taiwan or the United States has figured out how to deal with such a tactic.
Congratulations on your latest book, China's Project to Destroy America. Gordon Chang, tell us about your latest book.
Yeah, I wrote this because I think that America's policymakers and leaders fundamentally misunderstand China's assault on the United States. We think we're at peace. The Chinese are waging their brand of war. The Chinese regime believes it is in an existential struggle with the U.S., which means although we're a far more powerful country than China, we could lose. We could lose our country because the Chinese are assaulting us and we're not defending ourselves with the vigor that is absolutely necessary.
And, of course, in your previous book, the great U.S.-China tech war, certainly technology plays an important role in this rivalry, including electric vehicles, right? And what are the prospects for Chinese SUVs or EVs coming to America anytime soon?
Pretty low. The Biden administration issued a proposed rulemaking which would prohibit on American roads certain parts and software that are integral to China's EVs because we're concerned about them surveilling America's roads and sending the information back to China. Also, most of China's green products, which one way or another would work themselves into a Chinese EV, they're based on they're made with forced labor, which means under the 1930 Tariff Act, they're not eligible for importation into the U.S. The Biden administration has not vigorously enforced the 1930 Tariff Act provisions, but perhaps a new administration would.
Very interesting. I'm sure you've done an assessment as to China policy if President Trump were to be reelected or if Vice President Harris becomes a president. Give us your assessment of those important choices as it relates to China policy.
I think Beijing would favor election of Vice President Harris, not because her policies are less hostile, but because I think they look at her as controllable. They look at Trump. They like some things he does. They don't like some other things he does. But the point is that he is unpredictable. And we know that from Xi Jinping's April 2017 visit to Mar-a-Lago, where Trump stood up and said he had just sent missiles to Syria with a China friend, that really flummoxed Xi Jinping. So I think they're very concerned about about being able to control Trump, and they feel that they can't do that.
And Tim Walz, the Minnesota governor, the vice president's running mate, what about his connections with China? Have you had a chance to take a closer look at that?
The problem for Tim Walz is that over the course of the century, he has had continuous contact with the Communist Party's United Front Work Department, which is the part of the party that subverts foreign government. The United Front Work Department had to approve of those trips by high school students that Walz organized to China. And also as governor of Minnesota, as we know from Daily Caller reporting, Walz's contacts with front organizations in Minnesota have been very troubling. Walz even appointed a Communist Party agent to a Minnesota state government board. So I think that the American people should be asking Tim Walz about this relationship that has gone on for now 3 decades.
Gordon Chang, thank you very much for taking the call. We'll continue the conversation on all of this. And again, congratulations on your latest book, and that is China's Project to Destroy America. I'm speaking to Gordon Chang, China expert, Gatestone Institute senior fellow, author of The Coming Collapse of China, The Great U.S.-China Tech War, and now his latest book, China's Project to Destroy America, on X, formerly known as Twitter. You can find him at Gordon G. Chang. Gordon, thank you very much for joining us live here this afternoon.
Thank you so much, Frank.
And right out to the freeways we go now on 790 KBC. Mottek On Money continues here on 790 KBC. An eye-popping study finds that illegal immigration will cost taxpayers $2 trillion in Medicare spending alone under a Medicare for All system. There's been a dramatic increase in illegal immigration during the Biden-Harris administration, with nearly 10 million encounters and many of the same people along the U.S.-Mexico border in recent years. The number of illegal immigrants in the U.S. was estimated to be 11 million in 2022, with possibly an additional 1.5 million since then to 12.5 million. Keeping track of all of this from a taxpayer standpoint, joining us live now, Grover Norquist, the president of Americans for Tax Reform. Grover, thanks for taking the call here. This is new, and what's your reaction to this latest study?
Well, what it points out is that Kamala Harris, at both sides, is rather expensive. One, when she was put in charge of the border and decided, even though a wall had been built, to open up the doors and allow millions of people to come in illegally. Add to that she wants to impose something called Medicare for All, which kind of sounds nice, but it's Medicaid for All or else. You're required to get pushed into this government program. You don't have a choice. This bill was put together by the most left-wing Democrat out of Vermont, and Bernie Sanders, and she was the first person to co-sponsor it. So give you some idea of how excited she is about this big government bill. This legislation will make your health savings account illegal. You'll be forced into the government program. It'll make your present health insurance illegal. You'll be forced into the big government program. Whatever side efforts, other things you were planning on doing to make this possible, even when we think of Canada as having government-run healthcare, 30% of Canadian healthcare is in the private sector. This would go to zero. Oh, and by the way, there is going to be a tax on your wages. This is not free. A tax like Social Security on your wages. Middle-income people, low-income people, everybody's going to pay this tax on your wages to pay for everybody to be forced into the program. But one notes it's an additional $2 trillion in cost because of the number of illegal aliens that have come in, haven't been paying into it for 5, 10, 20, 30, 40, 50 years. They just got here, may never pay in, but they'd be getting the free, meaning taxpayer paid for healthcare. Very expensive, and amazing that she has combined her failure to police the border and her desire to have the government into one very expensive mistake.
This at a time when the national debt recently exceeded $35 trillion, and annual net interest payments surpass $1 trillion, higher than defense spending. If you can just think about that for just a moment. I'm sure you track it second by second, so you probably have the exact amount of what the national debt is up to here at the moment. But if all of this comes to pass, what's that national debt going to look like then?
Well, it'll keep getting worse for two reasons. One, she wants to have a lot of tax increases on capital gains tax. She wants theirs to be twice as high as China's. On the issue of the corporate income tax, she wants to push it. Right now, it's lower than China's. She would make it higher than China's. The personal income taxes would go up for every single American who pays taxes. So that's going to slow the economy down, which always increases deficits. And then she wants to spend more money on various projects. That will increase the deficit as well. It is on both sides, she's damaging the economy.
I see, according to that Tholos Foundation, I think that's how to pronounce it. It says Vice
Tholos
President Harris's Medicare for All proposal could cost nearly $44 trillion over the next decade. That's the estimate they have on the table. The cost of including illegal immigrants would be at least $2 trillion over a decade. So those are astronomical numbers here.
Yes, and that is a massive increase in spending. It's as if everybody was required to go to the post office. Nobody could use email. Nobody could use FedEx or UPS. We're going to have one big government monopoly running healthcare. And the challenge with government monopolies is they don't control costs and they don't improve in quality. Since they have no competition, why do they need to be any better next year than last year?
All right. As the election approaches, you've done a great analysis up till this moment here, moment by moment, covering the tax part of all of this. And I guess we're getting more clues as to what Vice President Harris has in mind as far as taxes are concerned. Of course, President Trump has laid out his vision on taxes. And, of course, there is that possible renewal of the Trump tax cuts here. But as we get closer to the election now, Grover, give us your assessment here of the choices folks will have to make.
Well, Trump has said he wants to, and the Republican House and Senate have agreed that they will extend the Trump tax cuts so that your marginal tax rates as individuals will not go up. Business taxes will not go up. Companies will be allowed to expense business investment, which encourages more investment. These are very important changes that have kept the economy growing and that will continue to. Sadly, Kamala Harris wants to do just the opposite, a $5 trillion tax increase over the next 10 years. So the difference between the two on taxes is very stark.
And it should be noted that if those Trump tax cuts are not renewed, it would be the biggest tax increase in history, right?
Yes, and interestingly, Kamala Harris says she wants to repeal them all. That includes the per-child tax credit. She wants to make them all go away. That is not it gives you some idea how left-wing she is. When Obama was faced with this, he allowed to sign the bill to make permanent the Bush tax cuts. 85% of the Bush tax cuts were made permanent. So after all this talk about it's only for rich people or something, they said, well, okay, they liked 85% of it, so 85% of it went in. It got continued. It put the lie to the argument that only rich people were benefiting. They realized they couldn't declare war on the middle class by allowing that tax cut to lapse. And Kamala Harris's position is she will allow lower taxes on middle-income Americans to lapse.
Isn't that something? Grover Norquist, President of Americans for Tax Reform. Grover, thank you very much for that thorough assessment as always. We do appreciate it. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money on 790 KBC.
Named one of the best personal finance podcasts, The Stacking Benjamin Show with Joe and his friends makes financial literacy fun.
I thought I can just keep spending money, however, do this back of the envelope math if I just cover it by making more money. The three words that make me groan the loudest that broke people say is, I deserve it. I was saying it all the time. Well, I deserve a night out. I don't have any money, but I'll take my last dollars and do a night at a restaurant.
Find out more by searching the Stacking Benjamins podcast, wherever you listen.